We are going to discuss one of the most complex days that you'll deal with. However, this demonstrates what trading is really about. It was also an extremely profitable day for me because I read it correctly. We're not going to go through the trades other than in a very general sense. This is not going to be easy. It is complex, and that's really what trading is about. There is no exact place you get in, no exact place you get out. However, there is very important, very exacting information. Okay, to start with, the market had been trending up for some time. Not too long ago, the market made a high for the long-term auction at 3029.50. From that point, the market started to edge down. Understand, if the trend has been up and the market starts to trade lower, it is unlikely that it will go in a straight line. And the reason for that is that existing traders are in the habit of buying all breaks. So usually when these markets start to break, if you understand what is going on, you will have multiple trading opportunities. Those multiple trading opportunities will be supplied by those traders that really don't comprehend that change is underway. Right now, we're looking at the daily bar. Next, we're going to look at the monthly bar. And I have to set the monthly bar up. I guess I lost it when we switched over. But what we're going to see on the monthly bar is that it had been one time framing up also. In one gone up for several months, came down, and then it one time framed up, gave us the excess high. Then the market started to trade lower. Once the market starts to trade lower, that doesn't give us confirmation. So what we'll be looking for is to see if we get confirmation that change has really taken place. The first indication of change is having a high in the long-term auction. We don't know if that long-term auction high is lasting or not. So we have a monthly high. The following month starts to one time frame lower. That's only by 1 month. It's not that meaningful. The next, we'll be looking to see if it can take out the low of the previous month as time goes on. So that is one of the things that we will be monitoring. Then for a little closer detailed look, we will go to the weekly bar. So you'll see that the weekly bar had been one time framing higher for 1, 2, 3, 4, 5 weeks. And then in the 5th week, it stopped one time framing higher. Notice how close together the bars are for the 4 previous weeks. When those bars are that close together, there's the potential for what we call the firecracker effect. The firecracker effect happens when one low is taken out. When that low trigger stops, there's enough momentum that that triggers the low for the next month, or the next week, or day, etc. In this case, it triggered the lows for several weeks. And that gives the market momentum to the downside. Now we see that the market continues to downside lower. Then the current week, we are inside last week's range. So we have indication that change has taken place in the market. We have an excess high. We have cessation of one time framing on the monthly bar. We have cessation of one time framing higher on the weekly bar. That doesn't mean we're going to show continuation to the downside, but it certainly sets up the potential for change. Okay, at this time, let's go look at the profile coming into today. So Jen, if we can switch over to your profiles, and we can then begin to take a look at what the market looks like coming into the 12th of September. I'm sorry,
You
it's
mean
the 12th
August?
of August.
Yeah.
All right. On the far right, what you are looking at is the overnight range. The far right is the overnight range. It did not take out Friday's high. This is Sunday night. It did not take Friday's high out on the upper end, but it did take Friday's low out on the lower end. So if you see the entire range, you see that it was substantial trade in the overnight range. If we can look very briefly at the overnight low, you will see that the overnight low is just a couple of ticks from the top of a gap. That is a very mechanical low. Markets go to levels that are very visual. When they bounce from those visual levels, they generally are not lasting. Doesn't mean they can't be, but generally they're not. Over the weekend, I had put out a tweet, and that tweet said that our focus today would be on the 2-day low. In other words, the low from the combination of last Friday and Thursday. Thursday, the market gapped higher. So not only do we have a 2-day low, but we also have a small gap. That gap is also going to be a focus for us. If there is anything meaningful on the downside, the market will trade down through the 2-day low, find acceptance, and begin to trade back below the bottom of the gap. When we come into trading on Monday, the 12th, we find that overnight inventory is short. If we can show Friday's high, if we can show the settle from Friday, you see the settle from 8.9. There was some trade above the settle, but there is substantial trade below the settle, and you see quite a bit of extension to the downside. If overnight inventory is short and we don't get a meaningful rally or a meaningful counter auction to correct overnight inventory, that is usually an indication that there's some weakness or selling behind the market. About 65% of the time, there is a counter auction or a rally relative to overnight short inventory. All right, Jen, let's play Monday. Let's see what it looks like live. Let's start at about 3 times the normal speed. This is very interesting this morning, and you have to keep in mind the references, but also focus on the behavior of those that you are competing against. There are orders coming in from short-term traders all over the world. And when the market opens in the morning, it can be very active. So we open within the overnight range, and we're trading down around the low from Friday. So we're back and forth. So the first reference we're going to be looking at is going to be Friday's low. That'll be the reference on the downside. On the upside, we will be looking at the unchanged level. So we're not close to unchanged at this point. So watch the market is rotating back and forth. No real rally relative to overnight inventory being short. Back and forth through the opening. And you can see there's still short-term traders still buying some breaks, but they're not getting much. Now the market trades down to just a couple of ticks. Now it is one tick below Friday's low. So you didn't find any acceptance down there. Now you're getting some acceptance down below Friday's low. The market, you can see that they're using that very visual reference. So the market took out Friday's low, came back up, record that low from Friday is only 2 ticks. That is not a substantial amount of excess below Friday's low. We're also still within the overnight range. So we have not, overnight inventory is short. We have not had a counter auction to overnight inventory. The market continues to trade lower. Notice that the inventory color of trade is very light colored. We can stop for a second. We're going to be looking, the red, the deeper red is the heaviest volume. Pink is next. White is the lightest volume. So if the market is to trade lower at this point, what we would expect to see is some pretty good volume. When it trades down on the white volume, meaning it's light, it's an indication we're getting selling, but we're not seeing overwhelming volume associated with it. Now, one other thing, before we start up again, I want you to focus on. Jen, could you show us the low of Friday's value area, please? Okay, the dark blue, or whatever color you want, that is the low of Friday's value area. Notice on today's trade, let's come down to today's trade where we're playing the market. Notice that we are far below the value area from Friday. Value is a very important observation. It will help you keep focused on the market. All right, let's go ahead and play some more. Remember, we're playing 3 times the normal speed. So the market is attempting to trade down to the overnight low combined with the 2-day low and the gap. The market is very aware of where those 3 references are, and notice that those 3 references are bunched fairly tightly together. The market is back into Friday's range. You can see this tremendous amount of uncertainty here, back and forth into Friday's range. Pressure is still to the downside. Overnight inventory is short, and the market has not had a counter auction relative to that. Now that's hard to keep straight in your mind when you see the rotation in the market, but it's important to be able to keep value in mind. Keep in mind that we're not getting a substantial bounce relative to overnight inventory, and we are finding some price acceptance down below Friday's range. So the market is back to about half back. That white line right there is half back. So early on, we're seeing value building lower, but we're not seeing a tremendous amount of confidence to the downside. It's not straight down. We're getting a lot of rotation in here. Okay. Remember, we're at 3 times normal speed. We're only a few minutes into the trade. You see the market that continuing to try and force its way down to the overnight low, the 2-day low, as well as the gap. The market is very, very much aware of where those levels are. And it's very likely that the first time down that you will see short-term traders buying at those levels. It's a very logical place to buy. It's a very logical place for them to see support. And there's been buying down there before. Traders have a tendency to do what has worked in the past, and buying at those levels has been very promising in the past. So we continue to trade. We're only about halfway through the first period, which is the first 30-minute period of the day. Values building lower. We have not had a meaningful rally relative to overnight activity. But the confidence also isn't that high. If the confidence was that high, we wouldn't have so much rotation. The other thing to think about in here, and everybody always thinks, well, are we seeing long-term money? If you had long-term money in this market, we would have gone down and sold off much stronger, much less rotation. So the odds are that what we are seeing is very short-term trading money. So we're back once again to the half back level. Market is trading again down below Friday's low. But we've been back into Friday's range a couple times. Value is building lower. Confidence, overall confidence is not high. Yes, we have a lot of single prints to the downside. Value is lower. But what we're going to see here in just a few minutes, we're going to see that overall volume isn't that great. So keep in mind the market is still pushing lower, continually come back and pushing lower. We know it's very visual. Markets, they're shooting for very, very visual levels. We see that all the time in markets. Keeping your head about you in a morning like this is very difficult because there's a tendency, oh boy, if they're selling lower, I want to go with that. But you're looking, you say, wait a minute, it's had a chance to really break hard. It hasn't done it. Signs of weakness because we haven't corrected overnight inventory. Signs of not so weak as we re-entered Friday's range a couple of times. So there's a tremendous amount of indecision going on in here. Market is trading lower. We're getting some liquidation. But notice there are traders buying at the low. See the way this market bounces? It's what I said earlier. They're short-term traders. They're buying the break. And this what can be very confusing, but it's understandable. They're looking and seeing those references. You've got the 2-day low. You've got the gap down there, very visual, and there's going to be traders that's what they're doing. They're buying as close to those references as they can get. And that can really cause some confusion. And we'll see down here that they're continuing to do this. Okay, we've got 7 minutes left in the first half hour. So continue to watch this. We're also, can you stop for 1 second, Jen? And while we've got 6 minutes now, can you do a quick look at the volume for the first 30 minutes? We use New York Stock Exchange volume as our best source. And I want to take a fast look and see what that volume looks like. Okay, do we have a look at the volume?
Yes.
All right, so you see that we've got 6 minutes to go. Volume so far is, well, the first half hour was 217. And that's final. So we're below that at this point in time. But keep in mind that a minimum that I'd like to think about is 280,000. And I mean, that's really a minimum. So the volume, as this market trades lower, the volume as it trades lower is very low. The low volume, the lack of confidence increases the potential for the market to rally. All right, let's continue to play. Remember, we're playing at 3 times normal speed. See the market continue to try and trade down to the overnight low. Values building lower. And here's where I'm going to tell you ahead of time what's going on, because here's where you can get trapped. You see the market trading off, and it hasn't corrected for overnight inventory. You say, boy, this market's pretty weak. I want to get in on this short. I don't want to miss it. Well, you can get trapped down here when the confidence is low and the volume is low. Get forced out of a trade, and the trade's going to work later on. But that's why it's very difficult, and it can be very frustrating when you do have an understanding of what the market's going to do, but you get stopped out before you get the good trade. So one more time, we've got just 3 minutes left in the first period. We've rallied back up towards Friday's low one more time, which is also just roughly half back, just a couple ticks below half back. Continuing to push the market lower. And as you saw at the end of the first half hour, which is coming up just in less than 2 minutes, volume was only 217,000 contracts. That is shares. That is exceptionally low. The chances are very strong that we will see a rally, and the chances are very strong that the market has gotten itself too short in the very short time frame. Now, what's confusing, you say, yeah, but Jim, we're building lower value. Yes, that is true. We are building lower value. One more time there, we're back up to Friday's. We're back up to Friday's low. So that's a very mechanical level. When the market sells off in B period, exactly from Friday's low, it's a very mechanical level. Now it's rallied back up again. Remember that volume on the first half hour was very low, so there's a very good chance that the market would rally relative to that low volume. Multiple times we've been back and forth from Friday's low. In the second period, remember the first period volume was very low. The market continues to explore the downside. You can see sellers that are still there. Confidence is low. Values building lower. We're using this day. It's an extremely complex day. It is an extremely important day for you to bring your trading together so you get a sense of what is real in the markets. And there are opportunities. Okay, so we're challenging B period is challenging the A period low at this point in time. So we rallied back up just above the 2,900 level. And you can imagine that they're still using 2,900 as a reference. Nice, easy number to see. The market looked above 2,900, sold off one more time from just above 2,900. Now they're again testing the early morning low and testing the overnight low in combination with the 2-day low. And that 2-day low is an important low to us. As we said in what I put on the tweet this weekend, if there's anything meaningful, we will find acceptance below that level. All right, now notice B period took out A period by a single tick. That is considered, if we can stop here for a second, that is a poor low. It's a poor low because there is no excess or single print. It's a very mechanical low, and it's an indication that the market has got weak buying there. It's not strong buying, it's weak buying there. That, whether we do it right now or we do it later, the odds are very strong that that low will be taken out before the day is over. Okay, let's continue to play. So remember, we're still at 3 times the normal speed. The volume was very low in the first half hour, which I thought increased the odds that the chances of a rally were very high. Market continues to push on the AB low, has not gotten it out. Okay, let's speed up to about 5 times, please. So we're going at 5 times speed. So notice the market, it's lifted off of the overnight, right around the overnight low / today's low, which is poor because there's no excess. Notice traders still a lot of selling rallies, buying breaks. Continuous two-way auction going on in here. Very difficult to interpret what's really going on. Here's where my focus was. Low volume, very low volume for the first period, and a poor low. Market is still focusing on the 2,900 level. This last rally, I think, came from about 28.99. Now we're back up to the 2,900 level. Just see how mechanical it is. So we're well off the lows, right? We're well off the lows. All right, if we can stop here. I got very fortunate overnight. When the market rallied overnight, I went short. And I went short for the following reasons. The market has been very emotional. It has been trading an awful lot off of the trade tensions. They seem to be discussed pretty heavily in the news over this weekend. I'm not sure there was anything really new, but some very prominent discussions on the trade wars and the potential of those wars to extend themselves and have an impact on our markets. Then, and also combined with the fact that the market had stopped one time framing higher on both the monthly and the weekly and was now trading lower, and we had an excess high. So I wanted to trade with the trend. The large break that you saw in the overnight market, early in the morning, I took my profits on the short. And I just said, whether I was right or whether I got lucky, I took my profits and stepped aside. So at this point in the morning, I have no trade on. I had a nice trade overnight. At this point in time, I have no trade on. But let's think this through together. I've talked about the importance of having a poor low or a non-excess low. The odds of coming back and taking that low out are very high. Combined with the fact that, remember, we said all morning, value is building lower. Now, what happens to traders an awful lot? They lose track of value because they get so mesmerized and so focused on price. And when that happens, their emotions go up and they start making some silly mental mistakes in trading. I focus a lot on the change of trend, an excess high. Short term, I'm looking at the fact we did not have a counter auction relative to overnight inventory. Value is clearly building lower, and I think there's a very good chance we're going to take out the early morning poor low. So what I'm looking for here, I'm looking for a rally, which I thought would probably happen because of the very low volume that took place, 217,000 contracts during the first half hour. Anything, my minimum is 280, and we're well below my minimum. And so I think the odds are pretty good. So I'm waiting to sell a rally. That's the trade I'm looking for. Let's go ahead and play. So we're about halfway through B period, where we just went back and forth through the opening. That's the green dot, a very mechanical level. And you see the market now is flirting with the 2,900 level, back and forth between the 2,900 level. Then it decides that they're going to rally it from 2,900, a nice easy number, but then you're back to the opening. The opening is a very mechanical, short-term reference. Traders know where that level is, very mechanical level. And you can see the constant trade around the open. So we're above the 2,900 level. Okay, so the market sell at 2,900 level looks pretty good to them. We're almost 3 handles off the low, or I'm sorry, almost 10 handles off the low. So it's a pretty good rally. So the market up, and now the market will be aiming for, there it goes, it takes out the morning high. All right, if we can stop here. As we stop, can we show one more time the Friday's value area low? There it is on the left. So we're a long way from the value area low. The chances of having just unchanged value on this day would be very slim. In order to get unchanged value, you'd have to rally strongly into Friday's value area and then extend past it and then spend considerable time there. So I think that's a low odds trade. Value is building lower. Remember, my focus on the poor low, my focus on value will probably be lower. So I am looking for an opportunity to sell a rally. When the market takes out the early morning A period high, that is where I take that opportunity in order to get short the market once again. Okay, let's continue to play. And I hope you understand what was behind my thinking. This is complex. This is complex, and it's very hard to get emotional control. Trading is a combination of, market understanding and self-understanding. And the two together can be a very, very dangerous mix sometimes. But again, I'm focusing on value. I'm focusing on that, poor low down there. Okay, let's speed it up to about 10 times. What you're seeing is very complex. It's a combination of the continuous two-way auction process, nuances. One of the nuances is the low down there. The poor low is clearly a nuance. Volume is important, but you could put that in the category of a nuance. Okay, so the market, it tried to go higher above the 2,900 level. C period rallies up, still leaves 2 ticks of excess on the high. And we're playing at 10 times normal speed now. So when the market rallied in B period, that gave the market an opportunity to bring some of the short-term, short inventory back into balance. So sometimes markets get too short to go any lower, and particularly short-term inventory. Remember my earlier comments, what is unlikely, based upon the early morning volume, that we had any real long-term meaningful selling. The odds are super high that all we're seeing is trading money. That is an extremely important observation. Again, in order to make that observation, you have to be able to keep things in perspective. Okay, remember we're playing at 10 times normal speed. We're about halfway through C period. But that perspective that if in fact we had real strong selling, we wouldn't leave a poor low. We'd have gone right through those levels very quickly. Okay, so the market now, we allowed some of that short-term inventory to come back into balance. That's what the short covering rally did. And poor lows very often are an indication that the market is too short, clearly a nuance. So now the market is back down below Friday's low again. The odds have greatly increased that value will be lower. Remember I said earlier the odds were very good that we'll come back down and take out the early morning low because there is no excess on that low. One more time, see the market bounces back into Friday's range. So we've got about 7 minutes left in C period. So C period is inside B period. So C period is a form of short-term balance within B period's range. Keep in mind, value is building lower. Back to half back. Notice again, the market is back mechanically to the 2,900 level. Just feel that short-term traders so focused on 2,900. It's kind of a, it's very easy. It's something easy. They don't have to think about it. 2,900. Okay, now, one of the things, if we could stop here for a second, another nuance. Notice that the D period high is a single tick above half back. That is going to play a very important part in what I am going to do here in just a few minutes. Again, how easy it is as a trader to miss that little nuance. Remember, overall confidence has not been that high this morning. Value's lower, but the confidence been relatively low, back and forth, Friday's range. Again, we said poor low down here. Good odds that's going to be taken out. If that low is taken out, the odds are good that we're going to fill the gap. Keep in mind that I am back to the short side again. Now, I'm going to tell you what happens here, just in order to help you understand how I think sometimes. That little D period high at a tick above half back, and it won't be half back if we get range extension to the downside. So you have to see it now, or you won't recognize what that high was if you get downward range extension. But I've already made up my mind. If in fact the market takes out the AB low and extends to the downside and fills the gap, I am going to take my trade, I'm going to take profit on my trade. And the reason for that is that I think that the D period high is very questionable, coming from just a tick above half back. All right, so I'm giving you a clue. The market's going to break, but I'm giving you an understanding of, I'm thinking ahead. I'm thinking ahead about what circumstances might happen, what I might do. Now, I don't know at this point that it's going to take that low. You've heard me say all morning, I think there's a good chance it's going to. And I bet on that along with value being lower. But right now, I'm thinking ahead of time, what would I do? Rather than, is there a point, where do I get in, where do I get out, where do I put my stop? That's not my thinking. All right, let's go ahead and continue to play. So C period was an inside bar, form of balance. D period, we're outside of the C period, a form of balance. So we'll come out of that balance. The market is trading down below it. We're down testing that low. We are only 5 minutes into the D period range. some volatility in here, and you can imagine it because it's going to be buying down around the lows. Okay, now remember, we're playing at 10 times normal speed. So see the market going back down towards that level. Okay, the market then takes and fills the gap. Okay, if you can stop right here, please. At this point, I exited my trade with a market order. Now, notice that there was some range extension to the downside. So the D period high is no longer at half back. So if you hadn't seen that nuance early on, it's gone and you would have lost it. But that little reference, that little nuance told me what I wanted to do. When this market broke, it filled the gap and I spiked down and got the stops. I exited my trade with a market order. It was a very nice trade. So I now have had two very nice trades today. I had the one nice trade from overnight that may have been luck. This morning's trade, I don't think was luck. I think this morning's trade was much better experience. And I think much better evidence that it was a well thought out trade. All right, let's go ahead and continue to play. So the market goes down through there. You know, it gets lots of stops, The gap is filled. You've got stops from the overnight low. You've got stops from the 2-day low. You've got stops from the filling the gap. So all kind of stops in there, and those stops trigger additional selling. So you saw the market go up, you know, to the 2-day low, and they sold it off again. Okay, so we're looking up here. We've got 10 minutes in real time. It's going to be much less because we're playing it 10 times on here. But at this point in time, my guess is that pretty good chance that we've seen the low for the day. Now we're going to play the rest of the day out. I don't know if that's the case, but when I look at this point in time, I have no trade. I've had two trades, one overnight, one this morning. I've stepped aside from the market. Okay, let's speed this up to about 15 times. Okay, so we're just about ready to change time periods. This is an extremely important day. It's a very complex day, but this is really a very important day because these are the type of days that you can get stopped out of and be right. You say, "Oh boy, I got stopped out, but I was right." And they're just important. And it's also important to understand the nuances. They do make a difference, and they help you make intelligent decisions. And if you make intelligent decisions, then, you know, if the market would have gone on, you don't end up, you know, spending time focused on what could have happened. You do what's right, you do where the odds are, and then you step aside. Okay, so I've done two trades, I've stepped aside. Whether I do anything else or not today, I don't know, but I'm watching the market. I thought I thought that was probably the end of it. Now you can see we're back to half back, trading above half back. One more time, we're looking at the Friday low. So we have the E period high is weak because it's a single tick below Friday's low. Okay, so now you can just see it's a weak level, very mechanical. Now we're back above it. So the odds were that E period would rally a little bit more. All right, so we're playing at 15 times. Let's go ahead and let's speed it up and let's play it at about 25 times. So we're playing pretty fast. You're going to have to replay this day several times. It's extremely important because it's a real example of a real day and a lot of complexity, a lot of opportunities for profit, and a lot of opportunities to have gotten whipsawed in the market. Okay, so we're back into Friday's range again. Now keep in mind, value is clearly lower. But let's stop for a second. While value is clearly lower, the market could have broken, filled the gap, and really showed extension to the downside. It didn't do that. So we've had considerable trade to the downside. Jen, can you flip one more time? Can we look at, what is this, the 1, 2, 3, 6th period? Can we go look at volume through the 6th period of the day? So if this market was really tremendously weak, we would like to see an increase in volume. Notice that volume is still low and it's still off from what it was on the last trading day. 150, 1.5%, 3.7, 3.9, 3.3, 2.9. So even though the market extended to the downside, filled the gap, took out 2-day low, there was no real meaningful increase in volume. So it's not a particularly high confidence day to the downside. All right, now you can take the volume away if you would, please. Now we're going to play this out at full speed. I'm going to tell you what happens. And I'm going to talk about a counter trade. Remember the focus on volume. The volume hasn't been that meaningful on the downside. Now, combined with that, what do we have? We have lower value. Value clearly lower relative to Friday. So what's going to happen here this afternoon is the market is going to trade around a relatively tight range here for a while. And then we're going to get a late break. And that late break is going to be relatively sharp. One more time, it's going to be one of those things when you see the sharpness of the break, you could say, wow, this market is really weak. If you go back and you look at the volume, you will see that there was no meaningful increase on the volume. So you're going to get a liquidation break, probably momentum trading, because the market's value is lower, the market filled the gap, and as the day goes on, no real bounce. But another trap comes up because this market's going to break very hard, and it's going to be very easy to get trapped and say, wow, what a weak market. And you're going to see the break. It's going to be a very sharp liquidating break, and then you're going to see a sharp recovery from that break. And again, that liquidation break probably is just still traders that were caught long from last week or from rallies this morning. But it's a trap. If you haven't followed volume, you could easily think that you want to be on the short side as that market breaks. You're going to see it breaks very hard, but it's going to come back. And a lot of the reason it comes back and comes back meaningfully is because it was not supported by volume. All right. So we're in H period. We're getting late in the day. Let's play it about 30 times. So we're going to play it at a very wide speed. So at 30 times, see the market one more time down near the base of the gap. You see the bounce right from that from that previous gap. Just look at the mechanical buying taking place in there. So that market's probably getting longer. They're buying, again, mechanically at that level. So we're later in the day, still buying right around that level. Just get that feel that traders, short-term trade, there's no long-term money. Short-term traders are mechanically still buying at that level. They're not getting anything for it. Now the market comes down and you see that we have, if you can stop for a second, please. Early on, we had a poor DI low, and we still have a poor DI low because there is no excess. So the odds are that we're going to take that out and trade lower once again. All right, let's continue to play at fast speed. So we're coming in late in the day. You see we're continue to get selling. Notice the confidence isn't that great, even though we're going to get a big price break in here. The confidence keeps coming back. So it's, here we go, very late in the day. Just notice that it keeps around. So that it's not as weak as price makes it look. One things I tell people, it's a very hard market to read in here. I didn't have any trades. I didn't do any trades in here. I had 2 trades early, very nice. And I look at the volatilities market and I say, no, thank you. I want nothing to do with this market in here. And it's one of the places traders go wrong. They think they have to be involved in the market at all times. If you're having trouble reading the market, stay out. There was a lot of volatility in here. All right, now we're getting, we're getting a late break. The JK low is poor because it's matching. The odds are that that's not going to be a lasting low. So you see a sharp sell-off in here. Okay, if we can stop right here. This, and as we stop right here, how many periods we have K, L, and M? We have 2 periods plus the runoff remaining. Can we go look at the volume now through K period? So one more time, we're back looking at the volume. And what we're seeing is, look on that break. The market did not increase in volume on the way down. It decreased. Okay, so we've seen that the lower prices are actually cutting off the volume. Now we're talking about spec trading. Okay, we can do away with the volume. We've looked at that. We've seen that this big break, volume actually dried up. This is an opportunity for a spec trader, and we're talking about spec trading. This is an opportunity for a speculative buy on the market. Lower prices, and lower prices were cutting off the selling, not increasing it. What you would expect to see is lower volume, bringing in more volume. It didn't. It brought in less volume. 2 things here. One, if you don't appreciate that, this is where it's very easy for a trader to get caught short. Get caught short can be very, but look at price. If you're following price, you say, yeah, but Jim, value's lower. It is, but volume is not supporting the break. So if you're short, I don't think you want to stay short. I think the risk is too long, but you say, wait a minute, I don't want to give this up. Look how low this might go. Those are the things that go through our head that can really mess us up. So I'm not getting out here. How would I feel if this market continued, several handles lower? Well, guess what? Sometimes that's going to happen. When you play the odds, the volume wasn't there. Exit the trade. So if you're short, I think the only intelligent thing to do is exit the trade. If it goes lower, so what? You're not going to win them all. For a super speculative trader, I think it's also a place to take a long position. Now, one of the things we continually talk about is monitoring for continuation. There's a lot of trades you can take if you know how to monitor for continuation. So if you take a long in here, monitoring for continuation, you want to see a buying tail left in K period. You want to see rejection from the K period low. That's how you would monitor for continuation. All right, let's play out the remainder of the session. Very, very important day. A lot of nuances, a lot to do with the continuous two-way auction market, a lot of emotion, a lot of understanding or not understanding the behavior of those you are competing against. This market goes down and, pushes on that K period low, takes it out a little bit, it can scare the daylights out of you. Look at the rally coming up. We're coming up. This is what I was talking about. This is what can happen. So now we're L, and we got M period, and then the N period runoff. Okay, we're just playing this out at a very, very high level of speed, just so you can see what the finished day looks like. More range extension in L period, M period. A lot of volatility, but look how much we come off of the low. The low was down there around the 2872 level, and now we're up to 84. It's a big rally. M and K highs match, so that is not a high confidence high. Okay, so you see we've now did take out the K period. So now the market's just about over. We're in the runoff period, and we can stop here. But it was an extremely important day. This is a video that you will have to watch multiple times, but it brings together everything that you really want to be able to take away as a trader. You've got value, lower value. You've got volume. You've got, poor references. You saw a very, very important reference in the D period high, which a single tick above half back, which led me to take off my short, which a lot of people wouldn't see because they get so mesmerized by price. And they get mesmerized by price, they lose sight of what is really going on. Price brings forth these emotions, and these emotions block out your ability to be a really good thinker. Let me say thank you, and I hope you go through this video multiple times.